As of 2026, federal data on elder fraud points to a very specific, very real trap tied to how debit cards work. And it's not about a stranger stealing your wallet. It's about a rule most retirees have never had explained to them. Your debit card and your credit card are protected by two completely different federal laws. And once money leaves your checking account through certain payment methods, no bank is obligated to give it back. Here's what this video covers: the exact situations where a debit card or a payment app linked to it can drain your account with almost no way to recover the money, why your credit card doesn't carry that same risk, and what to use instead in each case. Stay to the end. The last one is the trap most people fall into without ever touching their physical card because it happens over the phone. Before we get into it, this is exactly the kind of thing nobody explains clearly until after it's already cost someone real money. That's the whole reason this channel exists. Plain English, no persona, no upsell. If that's useful, subscribe and turn on the bell so you don't miss the next one. It's free. Here's why this matters more right now than it used to. Fraud targeting people 60 and older has grown sharply, and a growing share of it happens through instant bank transfer apps like Zelle rather than a physically stolen card. Zelle alone processed over $1 trillion in payments in a recent year, and researchers estimate fraud losses on the platform run into the hundreds of millions of dollars annually. The reason this involves your debit card specifically is that these apps pull money directly out of the same checking account your debit card draws from. Once that transfer clears, it behaves like handing someone cash, not like swiping a credit card. There's no built-in dispute process the way there is with a credit card purchase. If you're thinking, this isn't me, I don't use apps like that, the gas pump and ATM part of this still applies to you. And if your checking account is linked to any transfer app at all, even one you barely touch, you're exposed the moment someone talks you into using it once. And if you're thinking, I'd never fall for a call like that, that's exactly the assumption that costs people the most, because these calls in 2026 are far more convincing than they used to be, often already using your real name and partial account details pulled from old data breaches, which makes them sound legitimate before they've said anything false. Here's the part that should make you a little angry, in the useful sense. Banks are not required under the law that protects your credit card to return your money once you've been talked into sending it yourself, even if you were deceived into doing it. That's not some loophole scammers discovered. That's simply how the law was written, and no bank is going to explain that to you before you need to know it. Understanding this now, before anything happens, is the real protection here. The first trap: debit card fraud protection is not the same as credit card fraud protection, and the difference is entirely about timing. Under the Fair Credit Billing Act, your liability for unauthorized credit card charges is capped at $50 no matter when you report it. Your debit card falls under a different law, the Electronic Fund Transfer Act and Regulation EE, where your liability depends on how fast you catch it. Report unauthorized use within 2 business days and you're capped at $50. Between 2 and 60 days, your liability can rise to $500. Past 60 days from your statement date, your liability can become unlimited, with no requirement for the bank to return anything. This hits the retiree who checks their account daily, just as it hits the one who only glances at a paper statement once a month, and that second group is exactly the one most likely to miss the 60-day window without realizing it. The catch: with a credit card, the disputed money was never actually pulled from your real cash while you fight the charge. With a debit card, it's already gone from your checking account the moment the fraud happens, and you're waiting to get it back rather than never losing access in the first place. The action right now: use a credit card instead of a debit card for everyday purchases whenever you have the choice, and if you ever spot an unfamiliar charge on a debit-linked account, call the fraud number on the back of your card that same day, not when your next statement arrives. The second trap: gas pumps and ATMs, specifically with a debit card. Skimming devices, small illegal card readers criminals attach to real pumps and machines, capture your card number and PIN, and because a debit PIN gives direct access to your checking account, a compromised debit card can be drained in cash withdrawals before you ever notice, while a compromised credit card at the same pump only exposes a credit line, not your actual cash. This affects the retiree who fills up once a week just as much as the one who uses the same corner station daily out of habit. The catch: skimmers are usually invisible to the eye, so the only real defense is limiting how often your debit card touches an unattended reader at all. The action right now. Use a credit card at pumps and ATMs whenever one is available. And if you must use a debit card at a pump, choose credit on the keypad instead of entering your PIN. It routes the transaction differently and keeps your PIN out of the machine entirely. The third trap costs the most, and it never touches your physical card at all. It's a phone call, text, or email claiming to be your bank's fraud department, saying there's suspicious activity on your account, and that to protect your money, you need to move it to a new, safe account, usually through Zelle or a similar app linked to your debit account. This is happening right now in 2026, and consumer researchers note banks classify these transfers as authorized even when you were deceived into making them, meaning Regulation E does not require reimbursement. This affects the retiree who considers themselves cautious just as much as one who isn't, because these calls often already know your real name and partial account details from past data breaches, which makes them sound legitimate before they've asked for anything. The catch: your real bank will never call and ask you to move your own money to a different account to protect it. That instruction itself is the scam, regardless of how official the caller sounds. The action right now. If you get a call like this, hang up immediately and call your bank directly using the number on the back of your card, never a number the caller gives you or one texted to you. Before this week is over, do 3 things. 1. Switch to a credit card instead of a debit card for routine purchases, gas, and ATM withdrawals wherever you have that choice. 2. Save your bank's real fraud line from the back of your card, somewhere you'll actually see it. 3. Decide right now that if anyone ever calls asking you to move money to a safe account, you will hang up and call your bank directly, no exceptions, no matter how urgent it sounds. 3 steps, under 10 minutes combined, protecting money that has almost no path back once it's gone. Here's what's worth remembering. None of these 3 traps require anything unusual to happen. They exist inside the ordinary, everyday use of a debit card and a bank transfer app, built into how these systems work, with no warning label attached. That exposure sits there automatically. Closing the gap is entirely on you. That's not an exaggeration. That's just how these systems were built. If you know someone over 60 who reaches for their debit card out of habit for everything, send them this video. You could be the reason they change that habit before a scammer or a skimmer ever gets the chance. That's what this channel is here to do. In the next video, I'll walk through exactly how to freeze your credit for free, step by step, so a stolen social security number can't be used to open new accounts in your name. I'll see you there.